Something happened on January 1st, 2026 that most people in the financial world completely missed. While the rest of the world was celebrating the new year, China quietly pulled a trigger, one that could reshape the global silver market for decades to come. And the more you understand what they actually did, the more you realize this is not just a commodity story. This is a geopolitical chess move of the highest order. Stay with me, because what you're about to learn changes how you look at silver forever. If you've been following gold and silver for any length of time, you know that silver is not just a precious metal. It's not just something you stack in a safe. It's the metal that makes the modern world run. Solar panels, electric vehicles, semiconductors, AI data centers, military electronics, medical devices, silver is inside all of it. And for the past 5 years, the world has been burning through silver faster than it can be mined. But what China just did has turned an already dangerous supply situation into something that could push silver to prices most people aren't ready to believe are possible. And before we're done here, you're going to see exactly why. If you find this kind of analysis valuable, hit that like button and subscribe to Gold and Silver Intelligence. We go deeper than the headlines, so you actually understand what's happening in these markets. Now here's where the story starts to get uncomfortable. For 5 consecutive years, global silver demand has exceeded total supply. Every single year. In 2025 alone, the world consumed an estimated 1.24 billion ounces of silver, while total supply, including everything mined and recycled, came in at around 1.01 billion ounces. That's a deficit of over 230 million ounces in a single year. To put that in perspective, that gap is roughly equal to the entire annual output of Mexico, the world's largest silver-producing nation. And here's the part most people don't understand about silver mining. You can't just turn it up when prices rise. Around 70% of silver is produced as a byproduct of mining copper, zinc, and lead. Those mines don't expand because silver gets expensive. They expand based on the economics of the primary metals. Silver is along for the ride, and new mines take 8 to 12 years to develop from discovery to production. There is no quick fix for a silver shortage. But that structural deficit, as serious as it is only part of what changed on January 1st, 2026. Here's the bigger story. China controls between 60 and 70% of the world's refined silver supply. Not mining, refining. That distinction matters enormously. Raw silver ore comes from all over the world, but a massive portion of it gets processed and refined inside China. China built that dominance quietly over 2 decades, while the rest of the world paid little attention. And then, effective January 1st, 2026, Beijing implemented new export controls on refined silver that fundamentally changed the rules of global supply. Under the new policy, only large, state-approved companies are permitted to export silver, and even those companies must obtain special government licenses before a single ounce leaves the country. The qualifications are extraordinarily strict. Companies must have a minimum annual production capacity of at least 80 tons of silver just to be eligible. When China published its approved list, only 44 companies made the cut. Think about what that means. Hundreds of small and mid-sized exporters, the companies that for years had been reliably supplying industrial users, electronics manufacturers, and refineries around the world, were effectively locked out overnight. Here's where things get interesting. Elon Musk noticed this immediately. He posted about it over the weekend before the restrictions took effect, writing that it was not good because silver is needed in many industrial processes. When the CEO of Tesla, a company that uses silver in every vehicle it produces, in every solar product it sells, publicly warns about a raw material shortage, that is not a casual observation. That is a supply chain alarm bell. But here's what makes China's move even more significant than most people realize. This is not the first time Beijing has played this exact game. China spent years quietly accumulating dominance over rare earth metals, the elements used in everything from missile guidance systems to wind turbines to smartphones. Then, when the geopolitical moment was right, they used that dominance as leverage. The silver export controls are being described by analysts and even Chinese state media as placing silver on the same regulatory footing as rare earths. Beijing has formally elevated silver from an ordinary traded commodity to a strategic material. That is a categorically different thing, and the implications are enormous. Now, some analysts have pushed back on the severity of this move. It's worth being fair here. One perspective holds that China's 2025 silver exports were actually at a 16-year high of around 5,100 tons, and that the new licensing system is an administrative update rather than a genuine supply cutoff. That's a legitimate point. Markets can overreact to policy announcements, and some of the price surge in late 2025, silver hit above $80 an ounce, was partly driven by perception, by fear of restriction rather than actual restriction. But even the skeptical reading of China's move doesn't change the underlying structural problem. Whether China restricts exports dramatically or only moderately, the market was already in crisis before they did anything. Here's the detail most people miss. It's not just the export controls. At the same time China tightened silver exports, it also moved to halt exports of sulfuric acid beginning in May 2026. That might sound unrelated, but sulfuric acid is a critical processing input for extracting silver from ore, particularly through a technique called heap leaching, which is widely used when silver comes out as a byproduct of copper, lead, and zinc mining. China controls roughly 40% of the global sulfuric acid market. So while the world scrambles to source more silver, China simultaneously constrained access to one of the key chemicals needed to process it. That is a layered, deliberate strategy, not a coincidence. And the inventories are showing the strain in real time. COMEX registered silver inventories in the United States have fallen approximately 70% since 2020. The London Bullion Market Association vaults have lost around 40% of their holdings. Shanghai inventories fell to their lowest level in a decade. At current consumption rates, some industrial regions have fewer than 30 to 45 days of accessible silver reserves. Let that sink in. Some of the most advanced manufacturing economies on Earth have roughly a month's worth of silver on hand. This is where the situation becomes much bigger than a commodity trade. The US government noticed. In November 2025, the Department of the Interior added silver to America's critical minerals list for the first time, citing its essential role in electrical circuits, batteries, solar cells, and medical instruments. Silver went from a precious metal that investors hold to a nationally designated strategic resource. That is a profound shift in how governments are thinking about this metal. And when governments start treating a commodity as a matter of national security, the dynamics around it change completely. Think about what's driving the industrial demand that's creating this crisis. Solar panels require silver paste for their photovoltaic cells. The global solar industry is not slowing down, it's accelerating. Every new solar installation permanently removes silver from the available pool. Electric vehicles use silver in their electrical systems, sensors, and charging infrastructure. Humanoid robots, a technology China is leading globally, require silver in their actuators and sensors. Morgan Stanley published a report estimating the humanoid robot market could reach $5 trillion, with the number of robots potentially swelling to over 1 billion by 2050. Even a conservative estimate of 20 grams of silver per robot at that scale represents a staggering and permanent consumption of material. AI data centers, which are being built at a pace the world has never seen before, are packed with silver-dependent electronics. Artificial intelligence is literally consuming silver to think. Drop a comment below and tell me, did you know silver was this embedded in the technology we use every day? I'd genuinely like to know. Now here's the part that has serious money paying close attention. Something has been happening in the silver market that Wall Street's paper contracts don't reflect. In early 2026, physical silver in Shanghai was trading at prices dramatically above what futures contracts on COMEX showed. Analyst Stepan Kalinic noted that while the most heavily traded COMEX futures contract was at around $72 on January 2nd, the lowest price for a single-ounce silver coin in Dubai was already above $99. There is a growing and visible split between the price of a paper promise to deliver silver and the price of actual physical metal you can hold in your hand. And the ratio of paper-silver contracts to real physical ounces backing them was estimated at 356 to 1. That means for every physical ounce of silver sitting in exchange vaults, there are 356 paper claims against it. When the pressure gets intense enough, when enough people demand real delivery instead of paper settlement, that number becomes a very serious problem. This is exactly what happened in the lithium and rare earth markets when physical shortages became undeniable. The paper markets lost control of price discovery. Physical reality took over. And the prices that resulted shocked anyone who hadn't been watching the underlying fundamentals. Here's where things get even more interesting. China's own domestic demand for silver is surging at the same time it is restricting exports. Chinese silver imports reached extraordinary levels in early 2026, approximately 836 tons in March alone, compared to a 10-year seasonal average of just 306 tons for that month. China is simultaneously locking up its refined silver production inside its borders, while importing massive quantities of raw material from the rest of the world. They are accumulating, not distributing. That is the behavior of a country that believes silver is going to be far more valuable in the future than it is today. And Russia confirms silver purchases for national reserves. Multiple governments are accumulating silver at the sovereign level. When nations stockpile a material the way they stockpile oil or ammunition, the open market supply available to industrial buyers shrinks further. Now let's think about what this means for the future, because this is where the picture becomes very clear. Silver has already more than doubled in price over 2025. Gold is up over 60% in the same period. But silver's gains have outpaced gold's plus, which historically happens during the transition from an early precious metals rally to a full industrial scarcity crisis. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, compressed dramatically as silver caught up. But even after those gains, analysts are pointing to the structural deficit, the collapsing inventories, the policy changes, and the industrial demand surge as evidence that silver's move is far from finished. Silver peaked above $111 per ounce in early 2026 before pulling back. That pullback has some investors questioning whether the run is over. But here's what the data says. The deficit hasn't closed. The inventories haven't been replenished. The export controls are still in place. The industrial demand is still growing. Every fundamental that drove silver higher is still in place, and in most cases, it has intensified. The pullback looks like what historically happens between legs of a major secular bull market, not the end of one. Here's the broader realization that ties all of this together. The world built a global green energy economy, an AI economy, a robotics economy, and an electric vehicle economy, all of them requiring silver without ever securing the supply of the metal that makes them possible. And the country that controls the refining of that metal, China, has now formally designated it a strategic resource and placed its export under the same regulatory framework as rare earth elements. Meanwhile, global mine supply cannot meaningfully increase for years, recycling cannot fill the gap, and inventories are at historic lows. This is not a speculative story. This is a structural reality that analysts, governments, miners, and manufacturers are now confronting in real time. The paper markets may try to suppress or delay the pricing reality, but physical scarcity has a way of making itself known regardless. When a Dubai coin dealer is charging $99 for a single ounce of silver, and the COMEX futures say $72, reality is already speaking. The question is whether you're listening. At Gold and Silver Intelligence, we believe that understanding the difference between what the mainstream financial media tells you and what the actual data shows is what separates informed investors from everyone else. This is one of those moments where that difference matters enormously. So what should you take away from all of this? China has made silver a strategic material. Full stop. The structural deficit in the global silver market is entering its 6th consecutive year with no meaningful supply solution on the horizon. Industrial demand from solar, EVs, AI, and robotics is growing, not slowing. Global inventories are at dangerously low levels. Governments are adding silver to critical minerals lists and national stockpiles, and the gap between paper silver prices and physical silver prices is widening in ways that have historically preceded dramatic repricing events. Most people will not understand this until silver is trading at prices they can no longer ignore. The investors who do understand it now, before the mainstream catches on, are the ones positioned to benefit most from what comes next. Here's the question I want to leave you with. If China has spent decades quietly building control over the metal that powers the modern economy, and is now using that control as a geopolitical instrument, what does that tell you about the future value of physical silver held outside China's reach? Think about that, and when you've thought about it, share this video. Because this is the kind of analysis that most financial channels will not give you. The people in your life who own silver, or who are thinking about it, need to understand what is actually happening in this market right now. If this video gave you something to think about, hit that like button. It helps more people find this content. Subscribe to Gold and Silver Intelligence if you haven't already, and ring that notification bell so you don't miss what we cover next. The silver story is far from over. In fact, we may still be in the early chapters. We'll be right here tracking every development as it unfolds.